A reverse mortgage can be a genuinely smart move for the right senior, or it can quietly cost you your home and everything you meant to leave your children. And here's the frustrating part. The difference comes down to a few things almost nobody explains to you before you sign on the dotted line. The commercials make it sound like free money. It is not free money. But the scary videos that say you'll lose your house aren't quite right either. The truth is in the middle, and I'm going to give you all of it. So before you sign anything, watch this. Because the number one reason seniors actually lose their home with a reverse mortgage isn't the loan itself, it's a mistake most people never see coming. And I'll show it to you in about 60 seconds. I'll cover exactly how these loans work, the 3 traps that cost people the most, when it genuinely makes sense, and the smarter alternatives you should weigh first. Let me start with the one thing you must understand before anything else. Here's the single most important fact about a reverse mortgage. Even though you get money and stop making a monthly mortgage payment, you still own your home. You are still responsible for paying your property taxes, your homeowner's insurance, and keeping the house maintained. That's the catch that traps people. Because so many seniors hear no more mortgage payment and assume that means no more housing costs at all. It doesn't. And this is exactly where the danger lies. If you fall behind on your property taxes or let your insurance lapse, the lender can call the loan due and foreclose, even though you did nothing wrong with the loan itself. This is the number one way people lose their home to a reverse mortgage. So here's your rule, and write it down. Never sign a reverse mortgage until you are completely certain you can cover your property taxes and insurance for the rest of your life. And until you've done the free counseling I'll tell you about. Let me show you how this plays out, because this story happens far too often. Consider a woman we'll call Elaine. Years ago, she and her husband took out a reverse mortgage to help with retirement. It worked fine, they got extra cash, and no monthly mortgage payment. Then her husband passed away, and Elaine, grieving and on a tighter budget, made one very human mistake. She thought that because there was no mortgage payment anymore, there was nothing left to pay on the house. But the property taxes were still due, twice a year. She missed them. Then she missed them again. And because staying current on those taxes was a condition of her reverse mortgage, the lender declared her in default and began foreclosure proceedings on a home she and her husband had owned for decades, over a tax bill, not the loan. Now, here's the good news that could have saved her. There's a tool called a set-aside that can automatically pay your taxes and insurance out of the loan. And HUD requires lenders to try to work with you before foreclosing. Elaine didn't know to ask for either. That's the whole lesson. A reverse mortgage isn't dangerous because it's evil. It's dangerous when you don't understand your ongoing obligations. Let me make sure you understand all of them. If this could protect you or a parent from a costly mistake, tap subscribe. I help seniors make big money decisions with their eyes open. Okay, here's how it actually works. In plain English, a reverse mortgage lets homeowners 62 and older turn part of their home equity into cash as a lump sum, as monthly payments, or as a line of credit you draw from without a monthly mortgage payment. You keep the title. You stay the owner. The loan doesn't come due until the last borrower passes away, sells, or moves out of the home for more than 12 months in a row. But here's what you must picture clearly. It works in reverse. Instead of your loan balance going down each month like a normal mortgage, it goes up. Interest and fees pile onto the balance every month, so the amount you owe grows over time and the equity in your home shrinks. That matters most for what you leave behind, because a bigger loan balance means less inheritance for your children. Now, there is a protection here worth knowing. These loans are non-recourse, which means you and your heirs can never owe more than the home is worth when it's sold. Even if the balance grows past the home's value, the FHA insurance covers the difference. So your kids won't inherit a debt, but they may inherit far less than you imagined. Now, the 3 traps that cost people the most. Trap 1. The biggest. We covered. Falling behind on property taxes, insurance, or upkeep can trigger foreclosure. If money is tight, Ask about a set-aside that pays those automatically from the loan. Trap 2. The 12-month rule. If you have to move into a nursing home or assisted living for more than 12 consecutive months, the loan becomes due, which can force a sale of the home. If one spouse still lives there, that can protect the home, but only if that spouse was properly set up on the loan. So if you're married, make absolutely sure your spouse is protected on the paperwork, especially if they're younger. Trap 3. The upfront costs are steep, an upfront insurance premium. Origination fee. Closing costs often thousands of dollars. If you take a reverse mortgage and then move within a few years, you'll have paid all those costs for very little benefit. So this only makes sense if you plan to stay put for the long haul. One more. If you're on Medicaid or SSI, leaving large amounts of the loan money sitting in your bank account can affect those benefits. So plan your withdrawals carefully. Now, the protections that are on your side. The government builds real safeguards into these loans, so use them. First, before you can even apply, you're required to complete independent counseling with a HUD-approved counselor who does not work for the lender. Their entire job is to explain the loan, the costs, the impact on your heirs, and the alternatives. Do not treat this as a formality, it's your best protection. You can reach a HUD counselor at 800-569-4287. Second, even after you sign, you have 3 business days to cancel for any reason, with no penalty. So who is this actually right for? A reverse mortgage can make real sense if you plan to stay in your home for the rest of your life. You can comfortably keep up with taxes and insurance, and you need the cash flow, or you want a line of credit sitting there as a safety net. It's the wrong move if you might move or downsize in a few years, if leaving the home to your children is your top priority, or if there's any doubt you can cover the ongoing costs. Be honest with yourself about which one you are. And before you decide, look hard at the alternatives. Don't sign until you've weighed the other options, because one of them may serve you better and cheaper. If you can handle a monthly payment, a regular home equity loan or line of credit is usually far less expensive. Downsizing to a smaller home can free up cash without any of this complexity. Many states offer property tax deferral or senior relief programs that ease your biggest ongoing cost. And sometimes a family arrangement makes more sense than a bank. Finally, serious warning. Scammers swarm around reverse mortgages. Be very suspicious of any contractor who pressures you to use the proceeds for repairs. And never ever let anyone talk you into taking a reverse mortgage to buy an annuity, an investment, or another property. Those schemes are designed to strip your equity for someone else's commission. Anyone who rushes you is a red flag. Slow down, do your counseling, and bring a trusted family member into the conversation before you sign. So here's what to remember. 1. You still own the home, but you must keep paying taxes and insurance, or you risk foreclosure. 2. The balance grows over time and shrinks your heirs' inheritance, though NON recourse means they'll never owe more than the home is worth. 3. Watch the 3 traps: the taxes, the 12-month rule, and the steep upfront costs. 4. Use your protections: the free HUD counseling and the 3-day cancellation. And 5. Compare the alternatives, and never let anyone rush you. The single most valuable thing you can do before signing anything. Call a HUD-approved counselor at 800-569-4287 and talk it through with someone who doesn't earn a commission from your decision. A reverse mortgage can be a smart tool or an expensive mistake. The counseling is how you tell the difference. If this helped, subscribe so the next big money decision finds you prepared, and share it with someone over 65 who's considering one. I'll see you in the next one.